Hello and a warm welcome to the AI with Arun Show. In this episode, we are going to discuss a crucial shift in the finance function, the move towards a hybrid workflow where AI agents and human experts collaborate seamlessly. So, the question is, what if your CFO was almost an AI? So, let's start with the financial planning and analysis, or FP&A, which is truly the heart of strategic finance. Traditionally, FP&A involves extensive manual data collection and consolidation. With a hybrid approach, this changes dramatically, accelerating the FP&A cycle and deepening its strategic value. In the FP&A domain, the AI agent acts as a tireless data engine. It automates the laborious process of collecting and consolidating financial and operational data from disparate systems like ERP, CRM, HRIS, and supply chain management. Now, think about the time saved by not manually pulling data from various sources. The AI uses predictive analytics, historical data, market trends, and economic indicators to generate highly accurate baseline budgets and rolling forecasts. But its most powerful capability is running thousands of simulations for complex scenario planning. It can instantly answer what if questions like, what is the impact on our full year EBITDA if the cost of steel increases by 10% and logistics delays add 5% to shipping costs in Q3? Now, with the AI handling the heavy lifting of data and basic forecasting, the human FP&A analyst transitions from being a data wrangler to a strategic architect. Their role becomes defining the high level assumptions and key business drivers that frame the AI's models. Critically, they interpret the AI's outputs, applying their business acumen and deep contextual knowledge to adjust forecasts for factors the AI cannot know, such as the impact of a new competitive product or a planned change in corporate strategy. They use the AI's powerful scenario analysis as a tool to inform their strategic recommendations to leadership and craft the compelling financial narrative that explains the why behind the numbers. There is a powerful example of the impact. In a case study involving Philips, which is a manufacturing company, the annual budgeting process, which previously was a multi day effort involving 200 people, was reduced to just 3 hours using AI assisted forecasting. This showcases the immense efficiency gains possible through this hybrid approach. Next, let's talk about cost accounting and management. Now, this is a crucial function for many companies, including manufacturers, where accurate understanding and control of cost of goods sold and other production costs are paramount for profitability. A hybrid system provides real-time visibility and pinpoints efficiencies with surgical precision. In cost accounting, the AI agent integrates with IoT sensors on the factory floor and manufacturing execution systems to track production costs in real time where applicable, of course. It monitors material consumption, labor hours, and machine uptime. It can automatically and accurately allocate complex overhead costs to specific products. Crucially, it continuously analyzes this data to identify cost anomalies and variances from standard costs, immediately flagging deviations for human review. The human cost accountant's role shifts to setting the strategic foundation, establishing standard costs, and most importantly, investigating variances flagged by the AI. They act as detectives, determining the root cause of cost overruns. Is it a sudden price increase, an efficient machine, or a data entry error? Based on these AI surfaced insights, they collaborate with the operations team to develop and implement targeted cost reduction strategies. Moving on. Accounts payable and receivables are traditionally high volume, manual, and often error prone functions. This is the prime territory for automation, freeing staff for more value added work. For accounts payable, the AI uses optical character recognition, OCR, and natural language processing to sort of read invoices in any format, extract key data, perform a three-way match against purchase orders and goods receipt notes, and flag exceptions. For accounts receivables, the AI analyzes customer payment histories and credit data to predict which customers are at high risk of late payments. automating personalized reminders and escalations. The role of the AR and AP clerk is elevated to that of an exception manager and relationship specialist. They no longer perform manual data entry. Instead, they focus exclusively on investigating and resolving exceptions flagged by the AI, such as price discrepancies or missing purchase orders. They manage relationships with key vendors and customers, handling disputes and negotiating terms, tasks that require human communication and judgment. They also provide the final approval for payment runs. Now, beyond processing, AI's predictive analysis capabilities are vital in accounts receivable. It analyzes payment histories and credit data to predict late payments and automate personalized reminders. This proactive approach helps in managing cash flow more effectively. Let's talk about treasury and cash flow management. So, effective treasury management is all about ensuring liquidity and optimizing the use of capital. A hybrid approach provides real time visibility and predictive power needed to navigate financial markets effectively. The AI Treasury Assistant provides a single consolidated real-time view of the company's cash positions across multiple bank accounts and currencies. By analyzing historical cash flows, current AP and AR data, and sales forecasts, it generates highly accurate short-term cash flow forecasts. It can also model potential impacts of different investment strategies, debt financing options, and currency hedging techniques, presenting the outcomes and risk profiles of each option. The human treasurer and their team are the ultimate decision makers. They use the AI's analysis as a powerful decision support tool, but the final choices on investments, borrowing, and hedging strategies are based on their expert judgment and the company's established risk appetite. They manage the critical relationships with banks and financial partners and set the overarching treasury policies and risk tolerances that govern the AI's operations. Now, navigating the complex and ever changing landscape of financial risk and regulation is a critical task. A hybrid team can identify risks faster and ensure compliance more efficiently. The AI agent acts as a vigilant, always on compliance officer. It continuously monitors all the financial transactions in real time using machine learning to identify patterns that may indicate fraud or money laundering or other illicit activities. It also scans regulatory feeds from government agencies using natural language processing to read new regulations and identify which business processes will be impacted. It can then automate the generation of compliance reports and provide a complete audit trail. The human risk and compliance officers are the investigators and the strategists. They investigate the high priority alerts generated by the AI to determine if they represent genuine threats. They interpret the strategic impact of new regulations identified by the AI and design the company's response and implementation plan. They manage crucial relationships with external auditors and regulators and critically set the ethical guidelines and define the risk tolerance that the AI uses in its monitoring. This collaborative workflow enables proactive risk management. For example, an AI fraud detection agent might flag suspicious payments, while regulatory AI identifies new compliance requirements. Now, this allows the human expert to investigate and implement solutions before issues escalate, saving significant time and resources. Now, let's talk about financial reporting and period end closing. The period end close is often a high pressure manual process. A hybrid approach can transform it into a fast, accurate, and low stress event. The AI agent automates the most time consuming parts of the close. It performs automated account reconciliations, processes intercompany transactions, and calculates accruals. It can automatically perform 98% of the balance sheet reconciliations, presenting only the discrepancies that require human investigation. The accounting team then resolves the flagged exceptions. Once these are addressed, the AI generates draft financial statements, the P&L, balance sheet, and cash flow statement. This significantly speeds up the initial creation of reports. Senior accountants review these AI generated drafts, investigate any remaining variances, and confirm accounting treatments. Their focus shifts from data entry to ensuring accuracy and applying their professional judgment to complex, non routine accounting issues. Using generative AI, the system can even write the first draft of the management discussion and analysis, or MD&A, narrative by summarizing key performance indicators and variances. The controller and CFO then refine and finalize this draft, dramatically reducing the close from a traditional 10-day process to just 3 days or even less. Next, let's talk about capital budgeting and investment analysis. Decisions on major capital expenditures, like building a new factory or a new location setup, are amongst the most critical a company makes. A hybrid approach combines rigorous financial modeling with strategic human judgment to make these decisions. When a new capital project is proposed, the AI agent can build sophisticated financial models to analyze its potential return on investment. It generates detailed future cash flow projections, factoring in dozens of variables. It runs thousands of Monte Carlo simulations to model a probabilistic range of outcomes for key metrics like net present value and internal rate of return, and perform sensitivity analysis to identify which variables have the most significant impact on the project's success. The human finance and strategy teams are responsible for the inputs and the final decision. They define the strategic criteria for project evaluation and vet all the key assumptions fed into the AI's model. They then take the AI's quantitative output and weigh it against qualitative strategic factors that the AI cannot assess, such as alignment with long term brand positioning or potential market opportunities. Based on this holistic assessment, they make the final go no go recommendation to the executive board. Now, to help CFOs and finance leaders prioritize these transformation efforts, this framework that you see on the screen categorizes processes based on where AI offers the most value. It distinguishes between high automation, efficiency plays, and high augmentation, decision support plays. This table offers a clear view of the primary goal of AI in each finance process, along with its automation and augmentation levels, and the key role of the human expert. For instance, the APAR automation focuses on efficiency and error reduction with high automation and lower augmentation. In contrast, capital budget focuses on decision support and risk analysis with lower automation but high augmentation, where the human expert's strategic evaluation is paramount. Now, continuing with this table, you can pause the video and take a closer look. Let's talk about the evolution of finance as such. Now, this strategic framework reveals a profound shift in the very nature of finance function itself. It's an evolution that's already is underway. Traditionally, finance professionals have acted as historians. They spend the majority of the time on retrospective tasks, such as closing the books and reporting on what happened in the previous quarter. Their focus was largely on what happened. AI automates these backward-looking, repetitive activities. The true power of AI in finance lies in its predictive and simulation capabilities, making the function inherently forward-looking. Consequently, the value proposition of the finance team evolves. They spend less time asking what happened and more time asking what if and what's next. This elevates the finance professional from a scorekeeper to an oracle, a strategic partner who models the future and guides the enterprise towards its goals, enabling the agility that modern businesses demand. A continuous close future, this evolution will also dissolve the traditional rigid cadence of business operations. The monthly or the quarterly close is an artifact of an era of manual data consolidation. When AI can perform reconciliations and generate financial statements continuously and in real time, or almost near real time, the concept of a periodic close becomes obsolete. This leads to what Deloitte describes as a future where periodic close may fade in significance. The implication is a radical shift towards a continuous close or a finance command center model. In this AI-enabled future, major business decisions will no longer be relegated to quarterly review meetings, but still be made in dynamic weekly or even daily hurdles based on live, trusted data. This will force a fundamental acceleration in management processes and decision making speed across the entire organization. With that, we come to the end of the show. Thank you for watching. Like, share, subscribe, and let us know what you think in the comments below.